Welcome to today's Daily Report Market Analysis videos with me, Richard Perry, Market Analyst at Hantec on Thursday 19th of December. In terms of how we're looking at markets today, we've got a little bit of dollar correction, nothing too significant, although it's interesting that sterling has started to find a bit of a low after a few days of quite sharp declines. But it's interesting that we're not really seeing too much direction really across equity markets. In recent days, we've seen equities just hovering around and sort of a bit of uncertainty, certainly around how the Phase 1 trade agreement is going to actually pan out, and actually the finer points and the details of the translation are yet to be known. So markets are a little bit cautious on the back of that. But generally speaking, there's been a focus in recent days also about this impeachment process in Congress. For President Trump. Trump has been formally impeached by the House of Representatives. Now it moves on to the Senate, and the Senate now get their opportunity to cast their vote and, well, debate and then vote on whether to convict the impeachment. And the markets are not really paying a great deal of attention to this because basically the process is going along the lines of Democrat majority in the House of Representatives, hence the simple majority to get the impeachment through. However, now the 2/3 majority needed to convict President Trump in the Senate is just not going to happen. It would take an enormous change of heart amongst the Republicans in the Senate who hold the majority to vote in favour of the conviction. So it's just not going to happen. So subsequently, we're not really seeing a great deal of movement on that. A little bit of a slip back on the dollar today. You're seeing Treasury Yields rising as risk appetite remains pretty strong, actually. You can see Treasury Yields rising, and also that is driving a steepening of the yield curve. You can see the yield spreads widening out there on the 2s, 10s and the 10-year 3-month as well. So we're seeing safe havens sort of pressured a little bit. You're seeing yen underperformance. You're seeing the dollar weaker across the board pretty much. And also we're seeing gold limited real direction. So the Aussie is the outperformer of the day after better than expected employment data, where the unemployment rate fell to 5.2%, and also you had decent employment numbers as well, and also full-time employment better than expected. So just generally speaking, the Aussie employment data was better than the market had been forecasting. In terms of data points today, we've actually got quite a clutch of data, and it will be certainly UK focused initially, with retail sales just about to come out actually. We've got retail sales expected to drop to 1.9% on the year-on-year ex-fuel, and they have missed quite alarmingly, but interestingly, this is November. November tends to be a pretty positive month for retail sales because of Black Friday and the run-up to Christmas, but not this time around. Drop of 0.6%, so that's going to hit sterling today. Later on, we've also got the Bank of England with their monetary policy decision. No cut in rates expected, although 2 of the MPC are expected to vote for a cut. But certainly given the election result, it reduces the likelihood of any sort of easing bias too much there from the MPC. But we'll see how they set their stall out at 12 o'clock today. Also at 1:30, we then got the US current account, expected to improve the deficit to 122.1 billion. And then we're looking out for jobless claims, weekly jobless claims, 225, which would be much better than the 252 from last week. But that's likely to be a bit of an anomaly month. But interesting to see how that goes. Philly Fed as well at 1:30, expected to be 8 down from 10. At 3 o'clock. We've also got existing home sales expected to drop slightly, 0.2%. Right, so that takes me on to my chart of the day, which is the dollar Canadian. Now, the Canadian dollar has been strengthening. Look at this actually, we're ranging in the last 5 months on dollar Canadian, and the resistance around 33 to 33.50 has again put pay to that rally that we saw in November. A sharp turnaround. We've actually seen a 2-week downtrend now developing, lower highs, lower lows. Broke down below 31.50 early this week and has closed below that level now, so a decisive breach of that support. And it now pretty much opens out for a full retreat back towards $130.15 to 130.36. And looking at the momentum indicators, this is a move that is in process. RSI in the mid-30s still has downside potential towards 30. MACD lines have sort of gone and crossed below neutral, so this is an accelerating downside process. So you'd be looking to sell into strength. You've got the downtrend that comes in at 131.65 today. You've got the 131.50. Old support becomes new resistance. And you can see here on the hourly chart where that lower highs, lower lows comes in. And yesterday's high, 31.85, is your resistance. Sorry, 31.85 from 2 days ago is initial resistance to watch, but certainly it looks like this is a market in decline, and selling into strength is the way to play for a retreat back towards sort of the 30-figure area really is likely in due course. So with that in mind, I wish you good luck in your trading. Click here to subscribe to our analysis videos and go to our website to sign up for our webinars, which are now going to be next year, interestingly. Okay, so I'll speak to you soon.